Welcome to the Deep Dive. Today, May 16th, 2025, we're zeroing in on Bitcoin.
That's right. We're digging into a report, Bitcoin Outlook, Macro, Micro, and World Agenda.
And our goal here is pretty simple. Cut through the noise, pull out the most important stuff driving Bitcoin right now. Basically, get you up to speed without drowning you in data.
Exactly. It's a snapshot, but there's a lot shaping this moment and what might come next. We're here to unpack that for you.
Okay, let's start with the numbers. Where are we today? Bitcoin's hovering around $103,738 or so.
Right.
Now, that price alone doesn't tell the whole story, but the recent moves, they do. A tiny dip, like 0.28% in the last day.
Barely noticeable.
If zoom out a week, it's up over 7%. In the last month, a pretty hefty 23.94% increase. So what's behind all this? Let's start big picture, macro stuff.
Okay, macro. Well, the report suggests the global economic backdrop in 2025 is generally supportive for assets like Bitcoin. A big piece of that puzzle was the Federal Reserve cutting interest rates back in 2024.
Right. Those rate hits. How exactly did they help Bitcoin?
Well, think of it this way. Lower rates mean cheaper money, more liquidity sloshing around the system. And that extra cash tends to look for places to go, often flowing into assets seen as having higher growth potential or, risk assets. Bitcoin fits that bill for many.
So easier money finds its way into crypto. Makes sense. And the US dollar plays a role too.
Definitely. A weaker dollar, combined with lower real yields, that's your return after inflation, makes Bitcoin seem more attractive as a place to store value.
Okay, explain real yields quickly.
Sure. If your traditional investments aren't really beating inflation and the dollar isn't super strong, an asset like Bitcoin, with its fixed supply, starts to look pretty good, especially when you factor in worries about inflation sticking around or geopolitical tensions bubbling up.
And it sounds like people are expecting more of this easy money policy. I see chatter online.
Yeah, there's definitely buzz, particularly on platforms like X, anticipating the Fed might stay dovish, keep leaning towards lower rates. Some even think we could see more cuts by, say, July this year.
Which would likely be good for Bitcoin?
Potentially, yes, it could add more fuel to the fire. But, and this is important, there's always the flip side. If inflation suddenly spikes, or the Fed has to slam on the brakes and tighten policy aggressively, that could boost the dollar and really put a damper on Bitcoin's appeal.
Right, it cuts both ways. Okay, another huge factor seems to be who is buying. We're talking institutions, maybe even governments.
This is a massive shift we've been seeing. The approval of those spot Bitcoin ETFs in the US back in 2024, that was a watershed moment.
Oh, so?
It just made it so much easier for traditional finance players, institutions, and their clients to get Bitcoin exposure without holding the keys themselves. And we're seeing the results. Look at the money flowing into these ETFs.
And the trading volumes?
Huge. The report mentions Bitcoin futures volume on the CME hitting $3.5 billion on May 12th. That's serious institutional interest right there.
And it's not just buying, right? People seem to be holding it too.
That's another key indicator. We're seeing Bitcoin move off exchanges, a net outflow of 12,500 BTC in the past week alone. That generally means people are moving it to private wallets for the long haul, not planning to sell immediately.
Which reduces selling pressure.
Exactly. Less supply available to trade can support the price. And then you hear this speculation, again on X and elsewhere, about sovereign wealth funds or even the US potentially building a strategic Bitcoin reserve.
A US strategic Bitcoin reserve. Wow. That would be something.
It's speculative, of course, but the idea itself shows how perceptions are changing. And it ties into geopolitics, too, things like US-China trade talks. In uncertain times, some look to assets outside traditional systems.
Like Bitcoin as a non-state asset.
Precisely. A potential digital safe haven, in some eyes.
Okay, shifting gears slightly, what about the overall market mood? Bitcoin seems to be moving with stocks lately.
Yeah, there's a noticeable correlation with risk-on assets, like the NASDAQ and the S&P 500. Both saw gains recently, suggesting a broader optimism in financial markets is spilling over into crypto.
And the total crypto market cap is up too.
Right. It climbed about 3.2% to $2.25 trillion by May 13th. That reflects that risk-on appetite. But the report does flag something important. Market liquidity might be a bit thin.
Thin liquidity. What does that mean in practical terms, if I'm watching the price?
It means the market might be more susceptible to big swings. Think of it like a shallow pond. A small splash can make big waves. If there aren't tons of buyers and sellers ready at every price level, a single large order can move the price more dramatically.
So potential for more volatility, even if the trend seems up.
Exactly. Something to keep in mind, especially if macro worries resurface.
Okay, super important context. Now let's zoom in even further, the micro stuff. Technicals, what are the charts telling us?
Well, on the surface, the technical picture looks pretty bullish right now. The report says 27 out of 32 indicators are flashing green, basically, and the fear and greed index is at 73. That's solidly in greed territory, suggesting strong positive sentiment.
Any specific indicator standing out?
Bitcoin's trading above its key moving averages. Those are trend lines, essentially. The 50-day moving average is projected to hit over $115,000 by mid-June, which supports the short-term bullish view.
But I sense a but coming.
Well, yes. While the overall trend looks strong, some technical analysts, people posting on X, are pointing out it might be a bit stretched in the very short term.
Over it extended.
Yeah. Indicators like the MESID and something called the CRSI are hinting that maybe the price ran up too fast and could use a breather, like a consolidation period or a slight pullback.
Interesting. And there's a chart pattern mentioned, a triangle.
Right, the BTC USDT pair seems to be forming a narrowing triangle pattern. Technical analysts often see these patterns as indicating a potential corrective phase, wave 4, in Elliott wave terms, before the next big move. Support seems to be around that $101,500 to $102,000 zone.
So we could be nearing a decision point. Breakout or breakdown.
That's the idea. If it pushes decisively above the triangle's upper resistance, the next target might be around $109,000. But if it fails to hold that support near $150 some dollars, we could see it dip back down to test the $94,000 level again.
Okay, let's talk market mechanics again. Huge trading volume on Binance was mentioned, $9.2 billion. That sounds good, right? Lots of interest.
Generally, yes. High volume indicates strong interest, liquidity, lots of activity. It's healthy. However, the report also raises a slight concern about liquidity being withdrawn from exchanges overall since maybe November last year.
Wait, high trading volume, but liquidity withdrawal. How does that work?
It might seem contradictory, but think of it like this. Lots of trading is happening on the exchanges, but maybe more coins overall are being moved off exchanges into cold storage for long-term holding.
Ah, so active trading, but perhaps a shrinking pool of readily available coins on exchanges themselves.
Potentially. It reinforces that holding trend we talked about, which can be bullish, but it also ties back to that thin liquidity idea. It could make the market more fragile to sudden shifts or large trades. And leverage is always a factor. Rapid gains can lead to painful corrections if leveraged positions get wiped out.
Got it. And Bitcoin's position within the crypto market itself, still the king.
Absolutely. Bitcoin dominance is sitting around 54.3%. It's still the leader by a significant margin.
What does that mean for other coins, like altcoins?
Well, we see high volume in ETH BTC trading, which suggests capital is definitely moving between the big players. But as long as Bitcoin stays this dominant, it might cap the ability of smaller altcoins to really break out and outperform significantly, unless Bitcoin itself kind of chills out and trades sideways for a bit.
So Bitcoin's strength can actually stabilize its own price, in a way.
In the near term, yeah. It draws a lot of the market's focus and capital.
Okay, let's pull back again to the wider world. Politics, regulations. That U.S. angle seems important.
It really is. There's a fair bit of optimism in crypto circles following Donald Trump's re-election in 2024. The thinking is his administration might bring a lighter regulatory touch, maybe encourage more institutional involvement.
And that strategic Bitcoin reserve idea fits in there.
Exactly. That speculation, whether it happens or not, reflects this hope for a more crypto-friendly stance from the U.S. government.
But it's not like the whole world is suddenly rolling out the red carpet for crypto, is it?
Oh, definitely not. The global picture is still very patchy. You've got ongoing regulatory hurdles, different countries taking wildly different approaches. Environmental concerns about mining are still a big issue in some places.
Right, the energy usage.
Plus, you always have geopolitical risks, trade wars, maybe crackdowns on mining operations in certain countries. Those can inject volatility. And, the usual suspects. Bad news headlines, exchange hacks, big holders suddenly selling off. Those are constant background risks.
Although the holding trend we discussed suggests maybe less worry about whales selling right now.
The data suggests accumulation, yes, which implies confidence among larger holders for now. But it's always a possibility.
And despite these challenges, it still holds appeal in some regions.
For sure. Especially in emerging markets. If people are worried about their local currency losing value, Bitcoin can look like a pretty attractive alternative, a hedge against that instability.
Let's touch on that environmental point again. It hasn't gone away.
No, it's a major ongoing debate. Bitcoin's proof-of-work mining is energy-intensive, no doubt about it. That's a real barrier for some investors and regulators, particularly those focused on ESG, environmental, social, governance factors. It could slow adoption in some key regions.
And there's competition now from greener tech.
Yeah, you've got Ethereum having moved to proof-of-stake, and newer blockchains designed to be more energy efficient from the start. That could pull some capital away over the long run.
But Bitcoin still has its advantages.
Oh, absolutely. It has the first mover advantage, the huge established network, the brand recognition, and crucially, that programmed scarcity, especially after the halvings. That's a powerful combination.
Okay, so pulling all these threads together, macro, micro, global factors, what are the potential paths forward for the price, say, in the next few months?
Well, the report lays out a couple of scenarios. The bullish case really hinges on that macro support, continuing friendly Fed policy, institutional money still flowing in. If that holds, maybe Bitcoin retests that January high around $109,500, potentially pushes towards $120,000, maybe even $150,000 by Q3 this year.
And the catalyst for something even bigger.
That's where the speculation comes in. Something like a confirmed U.S. strategic reserve. That's the kind of news something could push it towards $200,000. Highly speculative, but it's out there.
Okay, and the less rosy picture. The bearish scenario.
That would likely be triggered by inflation rearing its head again, forcing central banks to hike rates, or maybe a major geopolitical shock. That could easily send Bitcoin back down to test support levels. We mentioned $94,000, maybe even $86,000.
And that thin liquidity could make a drop worse.
Exactly. Thin liquidity plus maybe too much leverage in the system. A sell-off could accelerate quickly. The report even mentions revisiting the April low, which was around $74,000, as a possibility in a sharp downturn.
Wow, quite a range of possibilities. What about the really long view, like 2030?
Yeah, you hear some big numbers thrown around, people like Cathie Wood, Joe Burnett. They've talked about potential targets from $250,000 up to $1 million by 2030.
What's the logic there?
It's based on things like mass institutional adoption really taking hold, Bitcoin's scarcity becoming even more pronounced, and its role solidifying as essentially digital gold. But, we have to stress these are very long-term, very speculative forecasts. They depend heavily on everything continuing to go right, macro-wise, and adoption becoming truly widespread.
So, summing up, Bitcoin right now, mid-May 2025, it's really at a fascinating crossroads, pulled in different directions by everything from Fed policy and ETF flows to chart patterns and global politics.
That's a perfect way to put it. You've got the big economic tides, the short-term market waves, and these undercurrents of global events and changing regulations. It's a complex mix.
And while nobody has a crystal ball for the price, understanding all these forces definitely gives you, the listener, a clearer sense of what's driving things and what could happen next.
Absolutely. The path forward isn't set in stone.
A great point to end on. So here's something for you to think about. If that U.S. strategic Bitcoin reserve were to happen, how might it change more than just the price? How could it fundamentally shift how the world sees digital assets? And looking beyond that, what other small policy changes, maybe things we haven't even considered, could end up having huge unexpected impacts down the line? Lots to ponder. Thanks for joining us for this deep dive.